we believed every business deserved to be paid. So that if a business has provided a service, well, it deserves to be paid for that service. So that was our cause. And then, so all our decision making was revolved around that cause. So I think it's really important that you identify, okay, why am I doing this? What's the problem I'm trying to solve, or why am I doing this?
Hello and welcome to Trillions. I'm your host, Alyse Grace, and today I'm chatting with Michael Dempsey, the former founder of Ezidebit, which sold for $305 million in 2014. Since then, Mick's established pipeline capital to diversify and invest in other ventures. On this episode, Mick talks about the sale of Ezidebit, knowing your business cause, and understanding it's important to focus on what you enjoy. This episode of Trillions is sponsored by Xenox Diamonds. Mention my name or the Trillions podcast and they will give you a free upgrade to platinum with any engagement or wedding ring purchase. Find them on Queen Street in Brisbane or order online. Michael Dempsey, director of venture capitalist firm Pipeline Capital. It's a pleasure to have you on the podcast today. Thanks for coming.
Thank you, Alyse. It's a pleasure to be here.
Yeah, thank you. So before PipeCap, you had a tech company, Ezidebit. So can you tell us the story of that? It's a really cool story of how you kind of fell into creating Ezidebit.
Okay, well, I'll go back a little. So, and I will go back to the engineering days. So,
yeah.
So I did engineering at university and spent about 5 years as an engineer, and ended up overseas, and I was working on an oil pipeline in a country called Yemen, which is below Saudi.
Yeah.
So very third world, Wild West. So I did that. Saved up some money because it was tax free, so the money was quite good. Came back to Australia, and then I had a job offer to go and work as an engineer in the northern Kimberleys in Western Australia, but again remote. And I just decided, this remote work's just not for me. So, and I thought, the engineering's really not for me.
Because you're a surfer, so you probably wanted to be closer to the ocean, right?
Yeah, well, look, it's just that working remote is, I think I'm quite a social person as well. So you just don't really get any social contact. It's a really hard life. So especially I think I was about 28 at the time. So at that age in life, it was like, it's just not for me. And I really had a good think about engineering and whether that was really what I wanted to do. But I think that's part of so like a lesson in life is a lot of people say go and do the things that you love, but then you go, well, what do I love?
Yeah.
So for me, I think the way to get to what you love is to leave behind the things that you don't like.
Yeah.
So,
great advice.
And that's been my philosophy quite a lot. Whereas if I wasn't scared to go to say, well, even though I spent 4 years studying and getting a degree, and then I spent another 5 years working as an engineer, I said, it's not for me, and I'm not going to do it for the rest of my life. So, so I made the decision to leave that behind, and I think that's part of the path to find what you love, which is really the ultimate goal. So if you're doing something that you love, then you can't fail at it, no matter if you're making money or not. So I basically came back to Australia, decided to discontinue working as an engineer, and actually just started working. There's a friend of mine who's a civil engineer, and we decided to join forces, and we started just some very small time developments. We're doing little house renovations and shift and splits and things like that.
Yeah.
Anyway, and that led us to building some childcare centres. So at the time, the government was encouraging the building of childcare centres.
Yeah, this is in the 90s, right? The mid to late 90s.
That's it. Yeah. Exactly. Yeah. And so unlike today, with there's a proliferation of childcares, they just started privatising them. So it was actually boom times for childcare. So and what the government would do is it would pay you 3 months of your forecast revenue the day that you open your doors.
Wow.
So So even though we didn't have any money, what we did have was we had a builder's license. And so we were able to bootstrapped the whole thing where we got vendor finance on the land, which means that the vendor who sold us the land left he left some money in there so that we didn't have to finance the whole thing. And then because we had a building license, we were able to go and get a construction loan. And again, but that loan was only for 80% of the construction cost. But we're able to run it through. But what it meant was that on the day we opened our doors, we got the 3 months revenue.
Yeah.
But we were very tight on cash, because all of a sudden that 3 months revenue went out the door, paying the vendor, paying the subcontractors. So we needed to run the centre well. And we had so what happened was we had good occupancy, but we were finding that we actually weren't getting paid from probably 30% of the parents.
Yeah.
So we had a bit of a cash crisis. And even though we were getting the government grant, so that the rebate, the childcare rebate, it was the gap fee that we weren't getting, which was basically, it was basically profit. So I used to have to call all the parents.
Do collections.
Do collections, yeah. So I'm on the phone, we've looked after Johnny, but you haven't paid us. When are you going to pay us? Yeah, I'll pay you tomorrow, and bang. And then next thing you know, I go to the centre, and little Johnny's been pulled. So little Johnny's been pulled out of the centre, and they're putting him in a centre down the road. So I've lost a customer, and I've got a bad debt. And so what I found was I was ringing. It was always the same people. It's the same 30% I was ringing. So I thought there's got to be a better way than this.
Yeah.
And that's when I looked at the idea of direct debit. And I thought, this is probably a good idea.
Yeah.
Because what I can do is I can pull the money out of their account as and when that invoice is due. So
nothing like that existed back then.
So direct debit was around, but it was only for your large institutions like your insurance companies
and they usually had their own in-house programs, right?
Yeah, exactly.
Okay.
Yeah. And so the banks had just opened up what they call a direct debit user ID, which enabled a business to go and do their own direct debits on a smaller scale. Mm-hmm. So I thought that sounds like a pretty good idea. Anyway, so implemented that. And the idea was that I only had to sign a customer once, and then I could pull the money as and when it was due.
Yeah. And
we were in a lower socioeconomic area, so I made sure I pulled the money out on dole day, so you get the money first.
Yeah, smart.
And that worked. Yeah. And anyway, it actually worked, and not only was I getting paid, but the customers of the centre, the parents were actually they were happy.
They weren't getting harassed by collections.
They're not getting harassed, and what normally happens is if they're behind on their payments, and they'll try and find an excuse as to why they're behind, so they'll blame something in the centre, and they'll try and find a fault. So we actually found that the centre was happier. I was getting paid, and then we had a much greater customer retention. So I thought this is pretty good. So I thought this is probably a better idea than childcare.
Yeah.
And so that's when started developing the first direct debit application.
So before
I was a bit lucky.
Oh, sorry.
Yeah. I was going to say, so as an engineer, I'd actually done a little bit of coding.
Okay.
And so I knew just enough to write a specification.
Yeah.
For someone to go and build.
Because I've thought about having things coded before, even websites, and it's like you show them what you want, but how do they know how to code that? So obviously there's a language in between. What you want.
It's good to have that little bit of understanding of how it all works and how it all goes together.
Yeah.
Just enough to tell someone. So when you're telling someone what you want, it's really good to have something in the background to understand how it goes together, so that you get it right.
Yeah, sure.
As opposed to building something and then you got to rebuild it. Yeah. So anyways, we went and gave a spec to a uni student at the time, and
awesome.
I think that cost $10,000 for the original Ezidebit application.
Awesome.
And and away we went. I think the first month's revenue was a total of about grand, $300.
Okay.
So I remember that's
better
what we
than
kicked
zero.
our first month's revenue. Yeah, better than zero. Yeah, but not much better.
And did you go up from
yeah,
that pretty consistently?
Yeah.
Increase the revenue?
Yes, but you always, at the start, you're always coming off a low base. So it's certainly, it's hard work for the first few years.
Yeah.
So to
So you
climb that
guys
revenue, even though yeah.
So you guys went out and hustled for sales, basically. So after you worked out this is a
Yeah.
great business model, and we've now got it built. How long did it take you to have that built? You said 10,000 the uni student. Did it take a year or months? How long was it?
Oh, no, it was only about 6 months.
Okay.
It wasn't that long.
That's pretty quick.
Yeah, it was. Yeah.
So then you went out
Just
and did
very raw.
sales, but it wasn't.
Yeah.
I know that it wasn't perfect, and you guys really focused on sales. And there's a saying that sales cures all. And obviously, with going out into the marketplace and getting lots of sales early on, you're able to get that feedback and then make adjustments and tweak. So, at what point do you know that it's ready enough to go to market? A lot of people spend probably too long on the MVP and they don't get their product out there for the marketplace to give them feedback. So at what point do you know that it's ready to go out?
Oh, look, I think it's at a point where you can sell something. So,
Okay.
we actually did a lot of the processes manually. So even though we had an automated process for direct debit on bank account, the process on credit card was still manual. So we actually had a merchant terminal, and so we actually had a credit card list. That's just a typed list that we would have to type all the numbers in and the amounts into a terminal. So, we did that for probably 2 years.
Wow.
Until we got to a point where we thought, what, let's not do this manually anymore. Let's write an application so that we can automate that, which is what we did. So, yeah, so behind the scenes, we're there doing a lot of manual things, but it was really vindicating the idea and the MVP.
Yeah, cool. Yeah, I used to use Ezidebit when I was a Jets gym member, and I thought
there you go.
I remember signing up to it and thinking, oh, this is cool. It just takes it out of my account. I don't have to think about it. Yeah, it's a really cool business, and great to meet one of the founders.
Yeah,
all right.
It's, very, very simple concept. Everyone goes, what? It's extremely simple concept, but we went narrow. We went quite narrow. We went deep and narrow, and what we did was probably one of the things that set us aside from probably a bank or a lot of other people is that we had an open API, and we tried to get as many software providers as we could that we could integrate into. So we had a whole library of other third-party software providers that we integrated into, and then we had automatic reconciliation coming through it.
So what's the benefit of having other software companies able to access Ezidebit?
So what happens then is that, so if you're at the gym, they would just use their software, which might be MindBody, and they would input your details, put it into just their software, as opposed to going to a web portal and using the Ezidebit software.
Yep.
And then our software would check with the MindBody software, for example, and see how much was due and when it was due. And so when it was due, we'd take the amount, and then we'd take it, give it to the business, but then we'd upload that amount into their software, so so then they wouldn't have to do all that reconciliation. So it would save a lot of administrative work.
So who paid for that integration? Was it you or MindBody or aka the gym?
We paid for that.
Okay, and then did they pay you like a recurring fee to access Ezidebit, or was it a percentage of every transaction?
So the transactions were paid by either the customer, who was the parent. In the childcare example, would be the parent, or the childcare. So it would be the parent or the childcare who would pay the transaction fee, and the software provider, for example, the childcare software provider, we would actually give them some money in the form of a rebate.
Okay, that's interesting. Yeah. Good incentive for them to be on your platform.
Yeah, a very good incentive for them to push it out to all their customers.
Yeah.
So that just made our cost of customer acquisition very cheap.
Yeah, cool. Okay, so
and we grew with them. So as they grew, we grew. So
Of course, and then you can keep approaching other businesses, getting them onto the platform. So at its peak, before you sold, Mick, what was your ownership first of all, and then what kind of revenue were you bringing in, and how many businesses did you have on the platform?
Okay. So I just a little over 50% ownership, and revenue. So revenue, we're doing about 45 million revenue a year.
Yeah.
I think we had about 4 billion going through that trust account actually.
Wow.
So that was flowing through our trust account, and then when I say revenue, that's the commission that we took on a transactional basis.
Yeah. Amazing.
And, yeah.
And then
we had
how
about
many
16,000 merchants, I think, and I think we had about 1.5 million actual customers. When we say customers, that's like the parents.
individuals? Yeah. And so that was through Australia and New Zealand
Yeah,
only?
Australia, New Zealand. Yeah.
Okay.
We just started in Hong Kong
Yeah.
before I sold.
And so why did you decide to sell? Because it sounds like a great business.
Yeah, I'll give you 305 million reasons why I sold.
Yeah.
That's why.
Yeah,
Look,
sure.
it was just an offer that it'd be pretty mad to knock it back. It's basically it's a generational change. It's a life change. It's a life-changing event.
So then, before the sale, you guys, what's it called when you put your feelers out for an IPO or a private purchase? Is that correct?
Trade.
Yeah. So you
went. Yeah, trade sale. Yeah.
Yeah. So you put your feelers out.
Yeah. Well, we actually had a few people approach us.
Okay.
So we had a few businesses that approached us to buy the business, and we thought, and they were talking some good numbers, and we thought, you know what, maybe it is a good idea to put this on the market. So fortunately, my brother was on the board as well. He's got a lot of he had a lot of PE experience, and so we decided to approach the bankers, and we got Deutsche Bank and Macquarie involved, and so they led the sale process. So it was they called it a dual track sale. So we went IPO'd on one track and then trade sale on the other, and we ended up with a trade sale.
To work out what's the best option for you or what the in. Okay, yeah, that's really interesting. I'd never heard of that, so that's really interesting. So you're working out what's the better option for you guys in the company, and then obviously the trade sale route was where you went.
Yeah, basically, what you're trying to do there is you're trying to get competitive tension. So so you're going down both tracks, and even the IPO guys, they'll actually try and pre-sell 80% of your business to institutions, so they'll get a pretty good idea what number they're talking. Yeah. And then the trade guys are on the other side, and you're trying to put one against the other and get then obviously a competitive tension, better price.
Yeah, so smart.
That's the idea behind it.
Okay.
Yeah, well, yeah, it's what the bankers do.
Yeah. And so since then, you guys have expanded globally. So I when I chatted with Philip Devella before he sold to Retail Food Group, he said that he knew it was a good time to sell because he'd expanded as much as he could within Australia. And then he knew that there was room for further growth internationally, and that's why RFG was a great option to take it international. So it sounds like a similar story to yourselves. You've done a lot within Australia and New Zealand, and there was a little bit of space.
We certainly hadn't reached our full potential in Australia and New Zealand. It was just that the offer was that good that, when I say that good, it was, it just took all the uncertainty off the table. So, so Global Payments, who bought the business, they've expanded the business we were growing at about 30% compound, and they continue to grow that business. There was another business, Transactional Services. They're about the same level as us when we sold, and they've only recently sold for like 1.2 billion. Wow. So I probably left a bit of money on the table there, but how much is enough? So I'm certainly happy with the process, and certainly happy that I sold. But there was a lot of room for growth, in Global Payments continued that growth trajectory, and they've actually and they have so Global Payments is a US based company. They've got companies in about 30 different countries, and they have actually pushed some of our processes out to their different countries, which is a good thing for Ezidebit, just to show that, and a good thing for Australia to go, because sometimes you wonder, what are you like on a world scale? But I think it did show that on a world scale, we're certainly well and truly up there.
Yeah, especially if your processes are being integrated with other companies. So as compliments to the chef, compliments to the original founders back in Australia.
Yeah,
Very cool.
it's good vindication to say that, in Australia we do things well, and
Yeah.
we do easily compete on a world scale.
Mm-hmm. And so you were taken on as an advisor for Global Payments. Are you still doing that? Consulting
Oh
with
no,
them?
actually no. On the day of sale, I threw them the keys and they threw me a check.
Okay.
So there was nowhere now. It was just like a house sale where, on the day they took over and I got the money, and we certainly I certainly spoke to them, but only on a friendly basis, and but there was nowhere now, nothing like that.
Okay. So you got the cash in the bank, Mick, and you dusted your hands with Ezidebit. Did you take a holiday? Did you do anything in particular to celebrate, or was it back to business straight away?
It's an interesting one, that one. Like it's a big change in your mindset. Yeah. So you've actually converted that business, which was generating good cash anyway. We were making 15 to 20 million a year anyway. So it was spinning out good cash. Now what happens is you're getting this lump of cash, and then you've got to put that money to work. And that is a very different mindset to being an entrepreneur. As an entrepreneur, I'm focused on risk and reward. I'm a high risk, I'm high reward. But when you've got that cash, you have to go into preservation mode. So it's really more focused on wealth preservation as opposed to wealth creation. So I've had to really re-skill myself over the last few years and learn all about asset allocation and all the different markets that your investors cash in, and the rules around preservation of cash as opposed to more risky things. Even though I'm naturally inclined to be risky, and I'm naturally inclined to be an entrepreneur, I've had to put the right people on a board to hold the reins a bit.
Yeah. So did you start Pipe Capital straight away with the cash into that, or did you invest in certain areas before putting some capital into your fund?
Well, so we use Pipe Capital is just basically our venture capital. So we use that to push the money out to different investments.
Did you keep some with in property or stocks or something like that?
Yeah, so that's all part of managing that money.
Oh, okay, understood.
So now it's diversified, and we've put some in properties, some in international stocks, some in domestic stocks, some in bonds. How much liquidity do we have? What's our asset allocation strategy at the moment? Is it defensive? Is it aggressive? Where do we think the economy? So where is the economy at? So there's a whole range of different things that are very different to focusing on a business, where all I'm doing in the business is driving revenue and profit.
Yeah.
So it's a very interesting mindset. And a big other thing is what the lump of it's hard. It can be hard to come to terms with the amount, the quantum of money that's sitting there. And I just seem to, I forget about it.
Like you can't quite fathom it.
It's not something that I even really think about.
Okay.
Really. So for me, my life hasn't really changed a lot.
Did you celebrate when you sold? Did you guys do something to celebrate?
Yeah, all the shareholders went out and we had a pretty big dinner, nice dinner, that sort of thing. And I'm certain I've got I do have a few toys that I've got. But I think the more toys you have, the more you realise that they don't really give you that much joy anyway. So
in the form of like cars, boats, Fancy
Yeah, but
surfboards. What have you?
all of the above.
Yeah, cool.
Yeah, yeah.
Yeah, I've
Yes.
driven a couple of luxury cars, the Ferrari, Porsche, and they're beautiful. They're certainly different to your everyday car, but at the end of the day, you're holding a steering wheel and looking through a windscreen, and even though you're driving a little bit faster than normal sometimes,
Yeah, well, you know what?
I'm sure it.
It's 100% correct. All they do is give me a sore back. So so I was like, oh my God, what am I driving this thing for? You're down low. You have to, it's hard to get into, hard
What
to
are you
get out of.
driving?
You
A
drive it for an
Lotus or
hour.
something?
Oh, that's that's one's a GT3 Porsche. It's like a racing, it's like a racing Porsche.
Yeah.
But actually, I don't drive it on the street much. I do actually race it.
Oh,
So
cool.
yeah.
What do
So
you have
my drive
a
car,
dream race that you want to do? Like a Targa or Bathurst or something?
oh, not really. It's that's just a bit of a hobby. I'm not a real enthusiast.
Okay. It is fun
Yeah,
though. But it is a
yeah.
good point.
It's fun.
It is a good point that you made that it doesn't make you happier. So toys are fun, but they don't. It doesn't increase your level of happiness. So for you, Mick, what does make you happy? What do you love
I
doing?
think it's got a bit. Well, actually, what I do love doing is building businesses. So I love being involved in businesses and building businesses and growing a business. That's actually what I love, um, and that's what I basically fell into with Ezidebit. So when my path from an engineer to doing a little bit of developing to the childcare centres to Ezidebit led me to this path where I was building and growing a business and employing more people. I think we had about 150 odd employees, which is before I sold.
Wow.
So it was, yeah, I think it was really good to see these people that I'd employed grow around me, and it was actually quite an emotional day when I actually had to get up and do the town hall and tell everyone that I'd sold the business,
Yeah.
that I was actually leaving the company. But that for me certainly creates a lot of joy, and really it's all about, for me, life's about the people that are around you and your relationships with them.
Yeah. Yeah, that's a great point. And in terms of building business, do you enjoy the strategy, the hustle, the sales, the beginning? Is there anything in particular, or is it mostly just having something in your mind and then bringing it? Because I think it's incredible when you have an
Yeah,
idea in your mind and then you bring it to creation. I guess the best way of describing that is a piece of artwork. You have a picture in your head and then you draw it. It's like a business, and
yeah,
it's really cool.
yeah. No, and it's and to get that idea and then convert it to something that's actually not just an idea, it's actually a working model, and then to actually convert that into working business. It takes a lot of effort, but it's so to answer the question. So for me, the strategy and product are my two key areas that I really enjoy. Um, yeah,
Okay.
strategy, product, sales. Yeah.
Yeah. And so with Pipe Capital, what kind of businesses are you investing in now? How,
Okay, so Pipe Capital, so probably our biggest investment is property management software business called Console.
uh-huh.
So that was actually as a business that was listed on the Australian Stock Exchange in the form of on the house, and along with Macquarie, along with Macquarie Bank, we actually privatised that business and sold a few bits of it, and we were left with the property management software. And so then we've had to build a cloud-based application, and we're now migrating customers from the client server application to the cloud-based application. So that's probably a big focus. But then I got investments in a web-based portal that is like realestate.com for cattle.
Uh-huh.
So we do cattle and sheep sales, but also cattle and sheep. So not just advertising the sale, but also the transactions.
Yeah.
That's a little one that's growing.
That's
Another one
interesting.
is I'm involved in some surfboards. So along with a mate of mine, the Goldie here, he approached me, and So I got involved with Lost and Pizell surfboard. So we manufacture and sell. And there's an online component to that business as well.
So do you
What
do you really
else?
see like
Just a few other little things.
the future of business as online, or that's just your specialty, so that's what you focus on?
Oh, look, I think both of those things. I think, certainly the future of business is on. Look, there's always going to be a bricks and mortar component because people love to get out and go shopping, and
Yeah.
and that people like the face-to-face interaction. But the beauty about an online business, well, especially something like say online, like Ezidebit or console with the payments, is that there's no stock. So no stock and pretty rarely any debtors. That's a pretty good business model.
Yeah, and low overheads if you don't have stock, you don't have storage and
Yeah,
like
the only
utilities and things like that.
problem is building software is tricky.
Yeah.
So it's something that it's not like building it's not like building a 10-story building where I'm at level 5, I'm going to have to go to level 10.
Yeah.
It's very hard to tell where you're at, what level you're at. Is it going to work? Is it not going to work? And when it's ever going to stop.
Right.
So So that's the tricky part of online.
With building software.
Yeah, building software.
Okay, because with software you can keep tweaking and tweaking and tweaking, right? So is that what you mean by where do you stop?
You'll never stop growing with software. There'll always be something new, and the more customers you have, the more exceptions you have, and it just keeps going.
Yeah. So how do you know how
It's
much to invest in software? Like at what point is there a percentage of how much you're spending on software versus the revenue? Or is there some kind of calculation that you would work off?
That's an interesting one as well. It's a bit like if you compare it to that building example. So if you're building a building, that's a capital expenditure where you're building something, and then you're going to rent it to get a return on that capital. So the same with software, it is basically a capital outlay to a point. So hopefully you're building something, you get it to a point where you're going to get a return on it. And that's the initial spend, and then all the additional spend should be. Look, you do have to maintain it, same as a building. You've got to spend money to keep the lights on and maintain it. But then there'll always be this more capital that's required in that building. And the trick is to make sure that capital is spent wisely so you're getting return on that capital, not just spending it.
To make it look pretty.
Make it look pretty and not get a return. Yeah.
Okay. Yeah, great tip. That makes perfect sense. Sometimes the simple things can be complicated, but makes sense to me. All right, so let's chat about your food, hotel, leisure. Is that just some of the businesses that you're invested in through Pipe Capital, or is that outside of that?
Sorry,
The
food.
Yeah, food and leisure businesses.
Yeah. Okay. So back at about the same time when I started Ezidebit, I also bought the Normanby Hotel.
Oh, cool.
So yeah,
I've been there before.
That was with my. Yeah, that's good to hear. Yeah. So I bought that in '99. Operated that for a couple of years, and then did a big renovation on it, and then opened it up in 2003. Fortunately, just in time for the World Cup that was in Australia, and that actually went went very well, and only recently sold that back in October last year. So that taught me a lot as well about running a business, and also that, and actually that was all about stock control and inventory control and marketing,
staff, hospitality, and
yeah,
staff.
exactly. No, you're right. Staff, cash, all the cash going through that.
How do you learn people management skills? Because especially in hospitality, it's a real hands-on. It's a people business. You're dealing with people. Your staff are the face of your business. How do you learn people skills?
No, I don't know. It's a good question. I don't know if you learn them. No, I think look, I've always loved my staff. I've always thought about my staff as they're helping me. They're helping me to to run the business and to improve the business. So I've always treated them well, and always tried to help them to improve themselves. And I've always thought, a lot of people get upset when someone leaves a business, but I've thought about myself, and I was in the business and I left because I always wanted to do my own business, start my own business. So, and I've go, well, what if someone wants to do that? I'm happy for them to learn with me, and as long as they're contributing, then always wish them well. And if something happens, always like to welcome them back. But I think that's probably a pretty big thing. The also think another big thing that we do is that someone's either, what I've seen a bit through some other businesses and some other people, is that if someone is upset with the team member or thinks that they're on the way out, and they start treating them badly.
Yeah.
And I'm more of the opinion that you're either in the team or you're out. And if you're in the team, everyone's treated well. But if you think that person should be sitting on the bench or out, it's not good enough for the team, well, then it's time for a chat, and better for everyone that the person's actually out of the team, not in the team copping shit.
Yeah.
So that's pretty well the way we operate that. You're either in the team or you're not. And if you're in the team, then you're a team member and you're treated well.
Yeah. So do you give chances, or is it kind of like once somebody starts to slack off and shows that they're not interested, they're out?
I think you've always got to give someone a chance. There's certainly people who won't learn, and I think, and sometimes it's very difficult to weed them out in an interview. Like, you'll never weed that out in an interview. So those type of people you really need to identify pretty quickly. Then if there are, you might give them a chance. You should give them a chance, explain something, just trying to understand why something didn't occur. But then if you have the opinion, well, that person's not going to fit in the team, well, then you shouldn't be scared to go. They're not going to be a team member. Yeah.
Yeah. Shouldn't waste time.
Yeah. And it's good. It's better for everyone, because otherwise you're annoying them, you're annoying yourself.
Yeah.
So everyone's annoyed. So you better off just going, nah. And you do it, but you can do you can do that in a nice way as well. Just
Yeah.
that we're not suited for each other. Yeah.
Gives them an opportunity too to find something that they probably love a bit more
they might love. Exactly.
Than that
That's
job.
exactly right.
They're stuck there because they feel a bit nervous about quitting, or maybe they just need that push.
Yeah.
And you're helping them by
That's exactly right.
pushing them out of the nest and making them learn to fly. So it's a nice way of putting it.
It's a very good way to put it.
Yeah. All right, Mick. Well, I like to flip the interview for a question. So, what's something you'd like to ask me?
Okay. Yeah. So what drives you then to what's your aspirations with your business?
Well, I come from a family of my grandparents were quite successful, and then my mum's generation, she was a single mum, and I saw her struggle a fair bit raising my sister and I, and I would really like to. Both my grandparents have passed away, so I'd really like to be the stick in the line in the sand where I build a legacy for our family. I don't see anyone really doing that right now, and I would hate to just live for myself this lifetime and not think about future generations. And so I'm really inspired to create something that's larger than myself, so that my kids and my grandkids and furthermore can be a part of that, and if they want to.
So how would you describe the cause? What's your cause? So what's your reason to? What's the reason that you started the business? Did you identify a problem and you wanted to solve it, or what is the business's reason to be? What are you trying to do for the community?
Well, that's a really good question, and I may not have it pinpointed hyper specifically, but at the moment, I feel like I have the skill to help other people with businesses. So at the moment, I'm helping my partner identify her voice, and we're creating a business together, empowering women around the world. We have a target of 1,000 for the end of this year to help them empower themselves with their health and fitness. And that for me comes from a background of a lack of health in my younger years. And then in addition to that, I love business like yourself, but I haven't built something large just yet. I love strategy. I studied public relations. So yeah, if you could help me identify that, then that would be really cool.
Look, I think what I was touching on there, like for me, I think it's really important that that there's a cause, there's a reason to be.
Yeah.
And your reason to be, it can't just be, oh, I want to make $300 million, because you've got to, in order to get people to work for you and to work towards your cause, they've got to come on board and rally around what the business is focusing on and helping the community. So like at Ezidebit, our cause there was that we believed every business deserved to be paid. So that if a business provided a service, well, it deserves to be paid for that service. So that was our cause. And then, so all our decision making was revolved around that cause. So I think it's really important that you identify, okay, why am I doing this? What's the problem I'm trying to solve? Or why am I doing this? And then once you do that, that's your cause. And then when you employ people, you have to really take them down that journey, and you'll find that you'll then attract the right people, and they'll go down that journey with you.
Okay. Amazing advice. So what's Pipe Capital's cause?
Well, Pipe Capital's a little different because it's just a vehicle to invest the proceeds and the money. But for example, the property management software. So that property management software is that's to help agencies manage their rent rolls. And same thing there. We're struggling a little bit with the cause there, but it's actually to make the property managers more efficient.
Okay. So when you talk to these businesses before or after you invested them, do you if they don't have a clear cause, do you literally sit down and chat about, okay, what specifically are we trying to achieve here? This is what the software does in terms of process, but what's the actual cause behind it? Do you have that conversation?
Yeah, that's a big thing. Yeah. So, and normally you have to sit down with a founder, and there'll be a reason why the founder started it. A bit like me with Ezidebit, I started it because I wasn't getting paid, and there'll be a reason that a founder that he's gone, this is not. I'm doing something that's not working for me. I need to improve this.
Create a solution.
There'll be a cause there. And you'll find what happens in a lot of businesses that once they're sold, then whoever buys them, they'll lose contact with that cause, and that's when a business might go into some decline, because then they don't really know why they exist.
Yeah. So for the buyer, even if it's a large firm, they need to be in touch with that cause and continue that mission.
Absolutely. Yeah. Exactly right. Yeah, I'm a pretty big believer in the cause there.
Yeah, that's it's a really good way of thinking, and I'm sure that a lot of people are going to take a lot of value from that question. Thank you. So lastly, Mick, I'd love to know what your personal legacy is. So what's your individual cause for your life, I guess I could say?
Look, so I think my personal legacy is probably all about family. So I'm hoping that I can give my family a comfortable life, but also a meaningful life. So, what's that saying? Got to give them enough to do something, but not too much to do nothing. So hopefully my legacy is that my children have got a purpose in life, and that they have a happy and meaningful life, and I certainly don't want them to. They don't need to have their own business, but they just need to have they need a cause. Everyone needs a cause, and hopefully they have a meaningful cause that keeps them happy for their life.
Yeah. Oh, that's lovely. It's really good that you're invested in your children and beyond yourself. That's great to hear.
Thank you.
No worries. All right, Mick.
You probably will once you have a few children, you'll know.
Yeah, I'm sure. I don't understand right now fully because I don't have any kids.
Exactly.
I'm probably a good 5 years away from that yet. I don't even have a dog.
Don't rush into it. Yeah, don't rush into it, mate.
All right.
But it is cool.
Yeah, cool. All right. Well, Mick, is there anything else you want to leave the audience? I have an audience of a lot of men, but also women who are heavily are interested in investing and business creation, living a life of freedom.
Uh, Look, I think the key things are really you do need a cause, so and get that cause early. So identify what your cause is very early. So then you can get your employees to rally around you, um, and then and probably the other big thing I think is actually try and find what you love. So, and the way to do that is to leave the things that you don't really like.
Yeah.
That's probably my two big messages there.
Yeah. Fantastic. Oh, thank you so much for coming on the podcast, Mick. It's been such a pleasure.
A pleasure, Alyse.
And I really look forward to meeting you in person.
Yeah, exactly. That'd be lovely. I'm in Brizzy a bit.
All right. Lovely. Thank you, Mick.
All right.